Welcome back. I am Pratap here. Today is 28th November 2023. Before we generate demand and supply zones, let us evaluate the performance of high liquidity zones generated in our last report, that is on last Friday. Even before that, look into this Nifty 50 chart. So finally, the professional gap is closed after several attempts. This is a professional gap from 75 minutes time frame. And today prices entered into the 75 minute zone during the last trading hour. And tomorrow we need to wait and see whether this zone is further going to push the prices or again tomorrow again with a gap it will break down. We have to wait and see. In case if prices go down again, it go down at some extent, again it will go up and finally it will try to enter into the daily high liquidity zone. This is the daily high liquidity zone. And even this daily high liquidity zone is having a professional gap. So definitely this high liquidity zone might provide you some good short opportunities. Now let us enter into the high liquidity demand zones identified in our previous report. IEX is a daily high liquidity demand zone. Prices did not enter into this zone. We did not get the entry today. Even Ultratech Cement is a daily high liquidity demand zone. And prices are not entered into this zone. Last Friday, prices entered into the entry buffer area. Probably those who have taken in this trade in this entry buffer area, maybe you would have got a good return today. But we are looking for intraday opportunities, and moreover, we don't know it is a high liquid entry buffer area until the first test is completed. Now we are confirming. Annually we are confirming this is a entry buffer. Maybe next time prices again enter into this area, we can look for an opportunity if the risk is very, very minimal. And next one is Divi slab. It is a high liquidity supply zone. Even prices did not enter into this, so we did not get the trade. HDFC Bank also high liquidity daily supply zone. We did not get the entry today because prices did not enter into the fine-tuned area. And India Cement is also high liquidity supply zone. Look into this, very interesting stuff. Today this supply zone, this high liquidity supply zone is broken. Even before breaking this high liquidity supply zone, it has given an intraday trade, a successful intraday trade. But another way there is a failure also. We have to look into, there are two scenarios. Let me explain both the scenarios. Because this is a fresh high liquidity zone, so I have fine-tuned at 75 minute zone. So this is the 75 minutes supply zone inside daily high liquidity zone. Because the risk is very, very high, obviously we have to fine-tune at 15 minutes level. So let us get into the 15 minutes area. In 15 minutes, we have two interesting supply zones inside this 75 minutes. This is the one already available, already drawn here. There is one more, let me show you. Definitely we will avoid trade in this. Why we will avoid? Because previously once I told you a concept. Let me change the color. Previously I told you one concept, when a zone will fail, if you apply those concepts, you don't take trade in this. The zone should not be a fresh zone. So this is not a fresh, it is a fresh 15 minute zone. The zone should be a fresh zone, sorry. The zone should be a fresh zone to take a trade. So this 15 minute zone is a fresh zone. So what we have to do to fine tune this risk, you can look into 5 minutes area. So let me change the time frame to 5 minutes. 5 minutes, we have a beautiful rally base drop. So this is the way we can fine tune. We have a rally base drop after the prices went down, and then again look into this. This is already tested first time, again tested second time. Okay, because it is already tested, but this is inside 15 minutes area. Maybe I am looking for another opportunity, deep entry. So for that, I have reduced the risk further. Still this got an entry even at deep level. Deep level means this is the type 2 proximal line. So that means this zone is already tested. Because this zone is already tested, it is a higher risk. See, if it is a high liquidity 5-minute zone, definitely you can take an entry, but this is not a high liquidity. And there are no price action clues also there to support this zone for the second entry. See today what happened? Easily this zone is broken. Instead, it has given an entry at this zone, the one above this. Because that is a fresh zone, that is not tested. Even if you look into 5 minutes, this is a 15-minute zone, fine-tuned 15-minute zone. Even if you look into this zone is not yet tested. The fine-tuned area is not yet tested even at 5 minutes level. That way we can trust this zone. Okay, fine. We want to trust this zone, but has it given any entry today? Obviously, it will give entry because the zone itself is broken. Before the zone violates, definitely there will be an entry. But is it successful or not, we have to see. Okay. So it is already given an entry. This is the first entry, this is the second entry, and third entry inside this zone is failed. Okay, we got an entry, but has it reached the target? This is very, very important. Okay. So for that, always we look for 15 minutes time frame because 15 minutes most of our intraday trades reach high liquidity intraday trades reach 15 minutes. So that's why I went to the 15 minutes. 15 minutes, have we find anything before this candle? See, this is the day before prices are entering into this. So obviously, this is the where we have a rally, base rally. It is already tested and this 15-minute zone is holding the prices for multiple times. And today what happened? We got the entry in this candle. Which time frame? 9 minutes, 9 hours 30 minutes. At morning at 9:30, prices at 15 minutes candle, prices entered into this zone and reached the zone. So we got the entry. But here one point you should observe. Look into the target on 15 minutes. This is a huge target. See, when you get a huge target, first point you should get into your mind should be, is it going to achieve? This is close to 12% return on the investment. What is our average return on the investment? 6.1. We have seen sometimes, or many times, not sometimes, many times, up to 7.5 or 8%, or even 8.5%. Many times this is our target. Then what about something beyond 10%? Something beyond 10% is a rare situations. Maybe you may think, why not this could be a rare situation? Today we may get this entry, that possibility is also there. But unfortunately, today it did not reach 15 minutes zone. See, expecting 12% return on the investment during the intraday is somewhat greedy only. It is greedy. But there are times, a few times we have seen in the past history, the price has reached even that much target during the intraday. So those who are looking for this, such a huge target today, definitely you got losses. Because price did not reach. It came down. After that it came down. See, this is the maximum level it reached. Why there is a huge rejection from here again? Because institutions created a new 5 minutes demand zone in this area, which pushed the price. Institutions decided, what they decided? This high liquidity zone should be broken today. That's why they took all the necessary steps. First last week they created a 15-minute zone, which is holding the prices. Today again they created a new 15 minutes time frame zone and new 5-minute zone. After that, with that they pushed the price because there is some liquidity is there in this high liquidity zone at 5 minutes, 15 minutes level that pushed the price down until the newly created 5 minutes. The newly created 5 minutes again pushed. Still there are some more pending orders in this zone. Again it pushed down. And once again, what institutions has done? They created a new 15 minutes demand zone. Drop, base, rally, and finally it created. Basically, they keep on increasing the demand until this high liquidity zone is broken. But before breaking this zone, there is some struggle in the price. Institutions struggled. That's why they created multiple zones and finally they broke. But during this process, is it reached our intraday target? At 15 minutes level, it did not reach the intraday target. Those who are expecting only 15 minutes target, definitely you missed the 5 minutes target. Even 5 minutes target is also good profit. But we missed. So that's why I'm saying it could have been a greedy trade for today. Expecting a huge target did not result at today. And those who looked for 15 minutes target, they got a loss of 2030 rupees. That is the risk of this particular 15 minute zone, supply zone. The risk is 2030 rupees, which is minus 1.04 ROI. Minus 1.04. That means close to 1% loss on our return on the investment. So this is the point you have to observe. So what about those who thought reaching this target is difficult? Definitely they would have taken a pure intraday trade. For that, let us go to the 5 minutes. In this 5 minutes, we have a rally candle, that is a leg in. Then we have three base candles, demand zone, and then we have a leg out candle rally. Even the first one is also equivalent to the leg out, but it is almost there inside the zone. Again, one more leg out. And here we got the entry. At 9:45 minutes candle. Exactly at 9:45 minutes candle we got the entry. The next candle it reached the target. At 9:45 it entered into this demand zone. That means within 10 minutes the intraday trade is finished. The 5 minutes intraday trade is completed. And which has given 9,135 rupees profit. This is 9,135 rupees profit. And which is a 4.695% ROI. That means close to 4.7% return on the investment it has given. That's a very good profit. 4.7% means close to 5%. Even though it is 1% or 1.5%, less than our average return on the investment, still it is a very good return on the investment. So those who observed this target is a huge target. and did not feel greedy and compromised for the pure intraday trade, that is on 5 minutes target. So you would have got 9,000 rupees, 9,135 rupees profit. So that's why I'm saying one way it is a successful trade and another way it is a failed trade. We have two opportunities are provided in this. See, even though institutions created a new demand today, they created multiple demands. This is a 15 minutes demand, again 5 minutes demand. After that, they created one more 15 minutes demand, ultimately to break this zone. So this is the first opportunity it has given. And this first opportunity is a successful for the pure intraday point of view. And this opportunity is also a failure for those who are looking for 15 minutes target. Prices went down and again came up, again came down and finally broken. So around 11 o'clock, between 11 and 11:10, all these zones, including the daily high liquidity supply zone, is broken. So this is one interesting point you have to observe, because sometimes if the reward is a huge reward, you have to put a question to yourself. Is it going to achieve during the intraday? If you feel doubt, look for a 5 minutes time frame level. What could be the reward? If it is a 5 minutes level, if it is a reasonable, then you can take the trade. See, most of the time 5 minutes targets could be around 2% or 2.5%. But this trade, 5 minute itself is almost 4.69, that is 4.7%. Return on the investment it is providing. That itself could be a clue. Something is happening. Because moreover, this is a newly created demand zone. See, it is a huge demand. Institutions created with a huge demand. See the depth of this demand zone. Maybe so many pending orders they might have kept here. They decided to break this high liquidity zone. That is what their goal. They achieved the goal. Before achieving, we got an intraday trade opportunity, successful trade on the 5 minutes time frame. That's why sometimes you have to take your decision during the market, live market, you have to change your decision sometimes. This is one such kind of trade. Always remember, stock market is not static, it is dynamic. Initially we planned, but today you have seen, see this is 9:15 candle. After 9:15, if you looked into Friday's data, there is no new demand zone. But today, after 9:15, a new demand zone is created with a huge depth in this. That itself is a clue for you. Already 15 minutes. On the top, they created a new. That means the institutions keep on increasing the demand inside the supply zone. When institutions keep on creating new demand inside the supply zone, when they decided to break that supply zone, that is the time such kind of events will take place. Moreover, the depth is high. Of course, there is possibility the pending orders might break this demand. That is also possible. But today's situation is different. They keep on creating multiple demand zones. That itself is an indication something is happening today for this particular high liquidity supply zone. Generally, we have seen many times we observed, after reaching the target, after some time, this demand zone will be broken. Many trades we have seen. It will achieve our target. After some time, the demand zone will break. We will be thinking maybe if we would have waited more time, maybe we may get more profit. Generally, we think like that. But we should not do that. The reason is, see, this is a classic example. After reaching, if you keep on waiting, thinking that this demand zone is broken, but is it happened? No. If you would not have booked your profit, if you did not book your profit, definitely you would have got loss. That is what might have happened for the people who are looking for this 15 minutes demand zone target. So this is a very important lesson you have to learn. Always remember, market is not static, it is dynamic. something price action is changed, immediately your decision also you should change. That way you get profits. At least you will avoid some losses. This is one classic example. So this is about India Cement. If you ask me, is it successful or failed? Okay, most of the times we are looking for 15 minutes demand zone. That way it is a failed trade. We can assume it hit our stop loss. But those who take dynamic decisions, for them, it is a successful trade. Anyway, in our Excel sheet where we are noting down all these trades for the last 2 months, so I will add both these points into that Excel sheet. So one trade as a failure, looking for 15 minutes target. Those who look for 5 minutes target, it is a successful trade. Okay, next one is Indus Ind Bank. This is an excellent trade. This is a 75 minutes zone. This is a 75 minutes demand zone. High liquidity demand zone. We have a drop, base and rally. See, today it reached, I have fine tuned to the 15 minutes and then 5 minutes. 5 minutes level, I identified one high liquidity zone. High liquidity 5 minutes. This is the one I have drawn here is a 5 minutes high liquidity demand zone. Inside 75 minutes high liquidity demand zone. Actually, what is our rule? Inside 75 minutes, we should look for a fresh 15 minute zone. So I identified a fresh 15 minute zone inside this. So let me show you how I identified fresh. We have a rally candle and 3 base candles. So I have drawn the zone like this. Before identifying 5 minute zone, what I did I am telling you. Have a rally candle and then we have another rally candle. Recently, one of the training videos, practical sessions of the training videos, I have explained invisible body and invisible zone. I don't know how many of you attended that session. So this is one such kind of example. It is an invisible demand zone, 15 minutes. Most of the times these zones work very well. Institutions purposefully they create such kind of zones because many of us are not aware of this concept. The invisible candle body and the invisible zone concept. So though if you did not attend this session, please look into the practical session. I think the third and fourth practical sessions in our training program, I explained about invisible body and next lesson I explained invisible zone. Okay, this is the one I have drawn, drop. We have 3 base candles and then we have a rally candle with the invisible candle body for leg out. That way we identified this zone. Okay, now what I want to do, I want to fine tune this risk. Because I want to fine tune, let me delete first this one. The one actually we have taken trade. So this is a fresh zone. And today it reached into this zone. Prices entered into this zone. But this is a fresh zone. So because I want to fine tune the risk, what I did, I went to 5 minutes level. And here I identified a high liquidity zone, 5 minutes high liquidity zone, drop 4 base candles and rally candle. Let me draw that. This is a 5 minutes zone, demand zone. Then after that I deleted because this is a 5 minutes high liquidity zone. I wanted to give more importance. Most of the time what happens? These the lower time frame high liquidity zones will attract the prices most of the times. That's why see the prices are moving within this zone only. We have a leg out and then we got the first entry, we got the second entry, again we got the third entry here. And today we got the fourth entry. I'm sorry. One, two, three, four candle. Yes. So this is the zone. The first entry, second entry, and then third entry, fourth entry, the last one, the one that created the invisible zone for the 15 minutes. So definitely what happened today also again it will reach. Maybe it may go inside at least till this distal line it will reach because our new zone is created here from here. A new 15-minute zone. That is what we have drawn here from here. So at least till this 5-minute zone prices will reach. See today at 9:35 minutes candle prices just entered into this zone and after that prices went up and finally at 12:55 candle it reached the target. This target is 15 minutes supply zone and which has given 9,350 rupees profit. And it is 6.529% return on the investment. Look into this. This is not a huge target. Why it is not huge target if you calculate ROI? Because before itself, before taking trade itself, you know what is your demand zone and what is your supply zone. So before taking the trade itself, you will calculate the ROI. But previous example, what happened? If you calculate the ROI, it was around 11.4%. I'm not saying 11.4% is not achievable. It is achievable, but rarely it happens such kind of occasions. But today, it didn't happen. Today, it resulted as a greedy trade. Those who look for 15 minutes target. But this is not a greedy trade. This is our normal trade only. Because our average return on the investment is 6.1%. And for this trade, it is 6.529%. It is close to that. Up to 8.5 is acceptable. Beyond 9%, beyond 10%, beyond 11%, they are all greedy targets. I'm not saying they cannot be achievable. They can be achievable, but rarely it happens. Sometimes there is a possibility that it will fire back. That is what happened today. So this is a successful trade. IndusInd Bank, 9,350 rupees profit and 6.529% return on the investment. These are the only two trades happened today. Next one is did not reach this is again a 75-minute zone, demand zone. Prices did not enter into this area. This is also having a entry buffer might be there, but we don't know. At least one test should be performed to confirm this entry buffer. Generally, high liquidity zones will be having entry buffers most of the times. This is also we identified, but we don't know this will, because sometimes what happens most of the times these 5-minute zones, 15-minute zones, easily it will fail and prices enter into that zone. But only few occasions these zones will hold the prices. When they hold, at the time only we can confirm it is an entry buffer. That's why you should be very careful. Next time when prices enter into this, if you take a trade that is a very aggressive without a proper clues, such kind of trade it is going to be. That's why entry buffer concept clearly explained, at least one test confirmation should be there. If you did not listen my entry buffer concept, we have a special video on entry buffer. Go to NeoStock terminology playlist. You can find the entry buffer related video in that particular playlist. So we did not get JSW trade, and the last one LTTS. This is also we did not get the trade. This is also 75 minutes demand zone. The prices did not enter into this. It is already tested once, but we have fine-tuned again a fresh 15 minutes area. Fine-tuned to 5 minutes. This is inside a 15 minutes area. 15 minutes also we have a zone here. We have a 15 minutes zone. We have a drop, two base candles and a rally. This risk is very high. Because the risk is high, inside this 15 minutes I fine tune to 5 minutes to minimize the risk. But remember, this is already tested once. That's why you should be very careful with this trade. The reason why I kept this is just want to watch. The reason is from here a lot of rejections are happening. When such kind of rejections happens, most of the time this will be converted to a high liquidity zone. Assume this is a high liquidity zone. Only future will tell this is really a high liquidity or not. So far it is not confirmed. Or there are no other rules. So the software algorithm rules not performed to confirm this is high liquidity. But already one test is there. There are few price actions are taking place. Before entering into this zone, prices are moving back. So anyway, we have to wait and see. But as per a fresh trade, this is not a valid trade. Please remember. So anyway, prices did not enter into this zone today. So these are all the high liquidity zones identified from our previous report. Now let us generate demand and supply zones for different time frames. So let us start demand and supply. Let us generate demand and supply zones for daily time frame. Entry time frame is daily. Let us find the stocks which are near to the daily demand zone. So, these 6 stocks are near to the daily demand zone. We have ABB is there, already tested 2 times and 9 rejections. So you should fine tune properly, otherwise this zone will fail. Check for a fresh zone, 75-minute zones, a deep inside. So we have only one high liquidity zone from this list. So let's go back. Entry time frame is daily. Let us find the stocks which are near to the daily supply zone. Nifty Private Bank, but it is pierced. Axis Bank is also pierced, so not a valid high liquidity zone. Hindalco is a fresh high liquidity zone. You can keep an eye on this stock. Jindal Steel is a high liquidity zone, and it is also having high liquidity demand zone. Remember, this is already tested 10 times. Why is it is tested so many times? See the risk, 14%. That means the depth of this zone is very, very high. That's why it has tested these many times. Within this 14% price area. Because the zone depth is very high, it's keep on moving inside. That's why you have to properly fine tune. You should properly identify lower time frame zones. So these are all the stocks near daily high liquidity demand and supply zones. So let's go back. Entry time frame daily. Let us find the stocks which are closed inside the demand zone. So 13 stocks are filtered where price closed inside the daily demand zone. So let's go back. Entry time frame is daily. Let us find the stocks which are closed inside daily supply zone. So we have a big list. So total 45 stocks are closed inside daily supply zone. Let's go back. Let us look into the tested zones. Entry time frame is daily. Let us find the tested daily demand zones. So these 7 zones are tested today. These 7 demand zones. So let's go back. Entry time frame daily. Let us find the tested daily supply zones. Good number of supply zones are tested today. So total 20 supply zones are tested. Daily supply zones are tested. Let us find newly created demand and supply zones on daily time frame. Entry time frame is daily. Let us find the stocks having newly created demand zones. Nifty auto, Nifty metal, Nifty oil and gas, Nifty next 50 new demand zones are created today. So total 28 stocks are having newly created demand zones. So let's go back. Entry time frame daily. Let us find the stocks having newly created daily supply zones. So only one stock is having newly created daily supply zone. Now let us generate bullish and bearish setups for the daily time frame. Entry time frame is daily. For bullish setup, entry zone should be a demand zone. Because this is daily time frame, our HTF trend is monthly. So monthly trend should be either uptrend or sideways. Because it is a bullish setup, weekly trend, that is ITF trend, should be uptrend. And the daily time frame, we need not bother about the trend. And when it comes to the price direction, we have two options. First option is monthly time frame. Let us select demand zone to supply zone. Next report demand zone to all-time high. So I'm selecting demand zone to supply zone. Weekly also demand zone to supply zone. This is the price direction. When prices are traveling from monthly demand zone to monthly supply zone, weekly demand zone to weekly supply zone, we can say it is a bullish scenario. When the trend is in favor and the price direction is also in our favor. And we don't want pierced zones for daily time frame. So I'm setting pierced count for daily time frame 0, 0, 0. Minimum 0, maximum 0. That means fresh zones. Now let us filter the stocks. So two stocks are supporting bullish setup with respect to trend and price direction, where monthly and weekly are having a demand zone to supply zones. And now let us look into the second scenario with respect to the price direction. Monthly is prices are moving from demand zone to all-time high, but weekly prices are moving from demand zone to supply zone, weekly demand zone to weekly supply zone. Remaining parameters are as it is. This is the second report. Now 6 stocks are filtered. Previously 2 and now 6. And third scenario, weekly also prices are traveling from demand zone to all-time high. That means both monthly and weekly, they don't have any supply zones. In such kind of scenario, we have a bigger list. Look into Nifty 50. Nifty 50 is also showing bullish setup. So total 43 stocks are there. This is about bullish setup for daily time frame. Now let us generate bearish setup for daily time frame. So entry time frame is daily. Because it is bearish setup, entry zone should be supply zone. Because it is bearish setup, monthly trend should be either downtrend or sideways, and a weekly trend should be downtrend. And the price direction, monthly should travel from supply zone to demand zone. Weekly also should travel from supply zone to demand zone. Now let us filter the stocks. So 3 stocks are filtered, and which are bearish in nature as per the trend and price direction. Now let's go back. Let us look into the next scenario. What is the next scenario? This time monthly is not having supply zone, so all-time high to demand zone they are traveling. Let us assume weekly supply zones are available, so supply zone to demand zone. No stocks are available. So even weekly also let us change from all-time high to demand zone. Mostly you won't get. So no stocks. So this is about bullish and bearish setup for daily time frame. Now let us generate demand and supply zones for 75 minutes time frame. So entry time frame is 75 minutes. Let us find the stocks which are near to the 75 minutes demand zone. So total 9 stocks are filtered. So we didn't find any high liquidity demand zones from this list. We have one zone is there, Bank of Baroda, but this is a confirmation trading related concept because most of you are not aware of this concept. So I am not considering this zone. And now let's go back. Entry time frame is 75 minutes. Let us find the stocks which are near to the 75 minute supply zone. So 11 stocks are filtered. So we have LTIM is there. It is already having one rejection. So you should carefully fine tune this zone. SRF is there, but it is already pierced, so we don't consider this. So we have only one stock listed here. High liquidity zone. Now let us generate bullish and bearish setup related stocks for 75 minutes time frame. So entry time frame should be 75 minutes. And bullish setup entry zone should be a demand zone. Because this is a 75 minutes time frame, our HTF zone, higher time frame zone should be weekly. So weekly trend should be either uptrend or sideways. And daily is ITF. It should be uptrend. 75 minutes you need not bother about the trend. And price direction, weekly should travel from demand zone to supply zone. Daily also should travel from demand zone to supply zone. And we don't want any 75 minutes pierced zones. So for 75 minutes time frame, pierced count I am setting 0. That means pierced count should be 0. We want only those stocks. So let us filter the stocks. So total 5 stocks are there filtered, All these 5 stocks are supporting bullish setup. This is the first report in bullish setup. Now let us generate second report in bullish setup. So here the prices should travel from the weekly demand, the weekly direction should be, price direction should be demand zone to all-time high. And daily, let us assume they have supply zones, demand zone to supply zone. Let us generate 2 stocks are filtered now. And now let us generate one more report, third report. And in this report, the price direction should be, but daily also it should be demand zone to all-time high. Both weekly and daily price direction should be demand zone to all-time high. Now let us filter. Now we have a big list. So total 32 stocks are filtered, which are supporting bullish setup, but all these stocks are not having supply zones on weekly time frame and daily time frame. Now let us generate bearish setup stocks for 75 minutes time frame. So entry time frame is 75 minutes. Because it is bearish setup, let us change the entry zone to supply zone. And trend also we should change from weekly trend should be this time, it should be downtrend or sideways, and the daily trend should be downtrend. 75 minutes we don't bother about the trend. And what about price direction? We have 3 scenarios. First scenario is prices are traveling, weekly prices are traveling from supply zone to demand zone. Daily prices also traveling from supply zone to demand zone. Now let us filter the stocks. So 5 stocks are filtered, which are supporting bearish setup as per the first report. Now let us generate the second report for bearish setup. This time price direction, weekly, let us assume there is no supply zone. So weekly prices are traveling from all-time high to demand zone. But daily, let us assume supply zones are available. Supply zone to demand zone, they are traveling. So only one stock is available, which is supporting bearish setup. Now third scenario, and daily also price direction is traveling from all-time high to demand zone. No stocks are available. So this is about bearish setup for 75 minutes time frame. Now let us generate for next time frame 15 minutes. So let us generate demand and supply zones for 15 minutes time frame. So entry time frame is 15 minutes. Let us find the stocks which are near to the 15 minutes demand zone. So total 5 stocks are filtered. Let's go back. Entry time frame is 15 minutes. Let us filter the stocks which are near to the 15 minute supply zone. So total 8 stocks are filtered. Let us generate bullish and bearish setups. For 15 minutes time frame, for bullish setup, the entry zone should be demand zone. Because it is 15 minutes time frame, HTF should be daily. So the daily trend should be either uptrend or sideways, and ITF trend must be uptrend. That is 75 minutes is ITF, and LTF is 15 minutes. We need not bother about the trend. And price direction, the daily price direction should travel from demand zone to supply zone. 75 minutes price direction also should be from demand zone to supply zone. And we don't want any 15 minutes pierced zones. So let us set 15 minutes pierced count as 0. Minimum 0 and maximum 0. That means only pierced count 0 will be displayed on the screen. Let us filter. So entry zone, demand zone, entry time frame 15 minutes. Zone violation daily is uptrend or sideways, 75 minutes uptrend. And the direction daily is demand zone to supply zone, 75 minutes also demand zone to supply zone, and 15 minutes pierced count is 0. So total 10 stocks are filtered. They are bullish. Now let's go back. Let us generate the second report. This time daily is traveling from demand zone to all-time high. So 3 stocks are filtered. Now 75 minutes also demand zone to all-time high, price direction. So 19 stocks are filtered. So this is about bullish setup for 15 minutes time frame. Now let us generate bearish setup. Let's go back. So for bearish setup, entry time frame is 15 minutes and entry zone should be supply zone, and the daily trend should be either downtrend or sideways, and the 75 minutes trend should be downtrend. And similarly, price direction, we have 3 conditions. First condition, daily should be supply zone to demand zone. 75 minutes also supply zone to demand zone. Let us filter. So total 4 stocks are filtered which are supporting bearish setup. Now let us go back. The next condition, daily, let us assume there is no supply zone. So moving from all-time high to demand zone. 75 minutes, let us assume supply zones are available. So prices are traveling from supply zone to demand zone. So no stocks are available. Third condition, 75 minutes also moving from all-time high to demand zone. Mostly you won't find stocks. So this is about bullish and bearish setups for 75 minutes time frame, 15 minutes time frame. And finally, let us generate demand and supply zones for all the stocks for daily time frame. Entry time frame is daily. Let us filter. Let us don't filter. Let us generate all the stocks. Without any filters, we have generated the list. I keep on scrolling the list down. Whichever the stock you want to refer, there you please pause the video. So this is the complete list of the stocks. I hope this information is useful to you. Let us all meet again tomorrow in our next video. Thank you.